All right, crew, I want you to forget the narratives. I want you to forget the noise. Remember how we always say that markets never repeat, but they do rhyme? Well, in this video, a video nobody else is going to be making, I'm going to be taking you back to show you manipulation from the beginning of Wall Street and how it's affecting the marketplace today. So I want you to really sit back. Get ready to enjoy this show that we got for you today. It's going to be like something you've never seen before because I am a Wall Street nerd and historian, and I got all the facts for you, and I want to show you and take you through. So welcome back, Crypto Crew. It is your boy Tom here bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it, okay? Because we're really going to be talking about a few things today, so you want to get a number two pencil out. We are, of course, talking about Bitcoin with every bull market begins when liquidity expands, and we're going to be covering that. Every Bitcoin top forms when liquidity contracts. And right now, we got liquidity that is expanding again. And I'm going to tell you, we're going to take you through where you're not really seeing where the massive liquidity is going to be come from. So I'm going to take you step by step through this. So get ready, because we're going to start from the beginning, and we're actually going to come with the receipts. Now, I want you to look at this cartoon that was put out in 1922. As you can see, it's Standard Oil, but it's all the same. It's how big companies get control of everything. As you can see right here in our little picture, this is us, right? This is them controlling everything, the Senate, the White House, all of it, all their tentacles, right? And it started when the robber barons got started to actually show their hand between November 24th and December 6th. Wall Street executed a synchronized acquisition of the hardest asset on earth. And it all started with one group, Morgan Stanley Capital International. I'm going to take you over to the site. We're going to go over it step by step. But as you can see, history does repeat. Kind of rhymes because it's really new firms, but the same old story. So this is your week in review, condensed. But here was the storyline. Phase 1, Morgan Stanley Capital International, the opening salvo. Morgan Stanley Capital International creates the panic. Started on October 10th. Okay, that was the first launch of the salvo. Nobody understood what was going on, why Bitcoin was crashing like it was crashing. But Morgan Stanley Capital International proposal to exclude Bitcoin-heavy firms from global indices. This was the first strike. Signals forced selling when the MSCI bombshell hits, okay, which they vote on January 15th on excluding Bitcoin heavy firms. Strategy faces 11.6 billion in forced selling. Why is that? Now, as you know, strategies are moving funds all around. Now, a lot of people are saying he's going to stand up and fight. I do believe he will. He's going to fight the shorts till the end. Now, let's not get into that, but just think about it. Who published a note about the whole thing? Who published the note? J.P. Morgan published the research note, basically saying that J.P. Morgan is also going to be launching products that will absorb the redirected flows. This isn't volatility, this is conquest. And I'm going to show you something that occurred back again in the 1920s, and you're going to see a picture of good old JP here. And this is what the normal folks like us thought about him back in the day. That picture right there is good old JP Morgan, and he's blowing bubbles to the crowd. The crowd is chasing the market, and the caption down here says, Wall Street bubbles, always the same. This is the same firm today that wrote the research note and also is starting to have the ability to absorb redirected flows. And again, as I said, constant conquest, because this is creating artificial downward pressure on Bitcoin. It threatens strategy. It seeded fear across traditional funds. It created this weakness in the battlefield before Wall Street moved in. These were the first two salvos. Okay, now, if we look at it, the gatekeeper itself, the CFTC, comes out on December 4th with a new crypto oversight and spot market guidance. This was the permission structure. Institutions now feel regulatory cover right now. Okay, this was insanity. We got compliance teams that stand down, advisors and wealth platforms get clarity, risk committees get green light crypto exposure. Without the CFTC, none of the steps that were taken beforehand would be valid. So you want to talk about, in my opinion, a collusion here? This just fits too perfectly. Now, they went a little bit out of sequence trying to throw us off the trail. But really, if you put everything together, this is exactly what we're seeing. Now, if we look at it, again, I'll take you back. Basically, J.P. Morgan, I'm going to take you back to that old picture again because I love it. J.P. Morgan playing the game in 1920, playing the game today in 2025. JP Morgan leveraged Bitcoin notes, filed approximately 1.5x upside and plus 30% downside protection. This was the first direct market action by a major bank. Ha! When retail panicked because when Morgan Stanley Capital International created chaos, JP Morgan filed for new Bitcoin products. They also came out with the research putting pressure on strategy. They bought into IBIT when everybody was leaving. They prepared to absorb flows from from Morgan Stanley Capital International's ripple effects. This is how the institution started to take the ground. So look at the bubbles, the tiny bubbles here. This is from Puck Magazine, wonderful magazine back in the day. But look at the bubbles. Okay, this is how the big institutions get control, and they've been doing this since the beginning of Wall Street. I could show you cartoons that date back to 1860s. I mean, just insanity. So J.P. Morgan basically filed leveraged Bitcoin notes, okay, with 1.5x upside, 30% downside protection. Now, the fortress begins to break. And who is the fortress? Vanguard. Because Vanguard was anti-Bitcoin, anti-crypto for years. What did they do? Vanguard banned, reversed, blocked the Bitcoin. Basically, they unlocked Bitcoin for 50 million clients. This was the most anti-Bitcoin firm in America. All of a sudden, suddenly pivots and says like, hey, you know what? We were wrong. Bitcoin is great. All right. So basically, this is not normal. This is complete coordination, because once Vanguard capitulated, the rest of the wealth sector had no choice but to follow. So Vanguard reverses its anti-Bitcoin ban, unlocking Bitcoin again for 50 million clients. Now, what do we get? After that, we get good old Bank of America through Merrill Lynch, their investment arm, come out and basically say the same thing. Okay? It's forced deployment. 15,000 advisors were now authorized to recommend Bitcoin up to 4% into their portfolios. This is mass mobilization. It's direct access to millions of retirees. Managed portfolios can now include Bitcoin. Flows become integrated into traditional allocation models. What's happening here is the wall between traditional finance and Bitcoin have collapsed. Look, if you're thinking about it, 15,000 advisors are going to recommend Bitcoin to hold up to 4% of allocations. Now, not everybody's going to take it. You got old people that maybe in their 70s that think it's way too risky. They're not going to do it. But the younger, wealthier clients are definitely going to do it. If you got to remember the guys that are in these funds, they're not really risk takers. Okay, they put their money with Merrill Lynch because they expect them to pick good. They basically invest in the S&P 500. Okay, it's safe. They get into the S&P 500. Maybe they'll do like the Russell. They're not going to do anything crazy. But while they, so they would never. People that were in these funds would never really invest into Bitcoin because they thought it was just too dangerous. But then, of course, we had BlackRock leading the way all along. And we got with the IBIT, right? IBIT shares itself. We actually brought that to your attention. Now, this is where it gets very, very revealing. IBIT, NASDAQ, IBIT options position limits increased to 1 million contracts. This is volatility suppression mechanism at work right now. Bitcoin is no longer a wild asset. It can now be hedged. Okay. It can now be beta neutralized. It can now be controlled. This is how you domesticate a once untouchable digital commodity. Now, this also opens up the door to what? To them being able to shake the market one last time, shake the tree, bring it down deep, deep, and that will shake everybody out because their whole gig, man, their whole gig is to control the rails. Now, if you think about it, we got what, 7 institutions because we have to include good old Charles Schwab into this whole thing right now. So Charles Schwab is also getting involved in spot Bitcoin and Ethereum trading, not in ETFs. They're going to let people trade this stuff. It's going to be all over the map. Now you're talking about TD Ameritrade, you're talking everywhere. Okay, everywhere because of what happened with the CFTC. All right, now, as we could say, there was over 50 trillion in combined assets in these groups that I just went over with you. Vanguard, Morgan Stanley. Actually, I'm sorry, I was saying Merrill Lynch. You're talking about MSCI is getting involved also, of course. But you got really, you got some really serious cats that are playing this game. So again. We're going to get into liquidity right now. I just want to get my head straight around this. So really, this wasn't coincidence. This is actually all choreography. Okay, there's a dance being played out right now, and we're witnessing it. So, again, if you look at the Wall Street barons, the pictures of the Wall Street barons, I just love to show you because think about the pictures I'm showing you happened back in 1920. Perfect cartoon. The Wall Street giants grabbing everything, and also us as well, if we're not prepared, right? So really, if you think about it, retail panic sold in November 3.47 billion. Wall Street accumulated. BlackRock's IBIT lost 2.34 billion out of it, but guess who was buying? J.P. Morgan. Okay, Abu Dhabi quietly tripled its Bitcoin holdings. JP Morgan increased its IBIT position to 343 million, up 64% quarter on quarter. So retail basically ran, they were confused, institutions walked in. Nasdaq increased IBIT option limits 40x to a million contracts. Volatility suppression now structurally enabled. Bitcoin is being reshaped into a controlled portfolio asset. The asset to eliminate all intermediaries is now being domesticized by them. So the code is basically untouched. The supply cap holds. The network does not care, but the economics, the flows, the volatility, the access now point upstream to Wall Street itself. Yep, the revolution wasn't stopped. It was completely monetized by these guys. So really what we can say is that conquest really has happened. We got the puppet masters in the background, JP Morgan, Schwab, Vanguard, of course, BlackRock. There's a few I couldn't mention there. But really, if we look at it, MSCI weakened Bitcoin, the CFTC legitimized the entry, JP Morgan initiated the strike with Morgan Stanley Capital Management. We got Vanguard that capitulated. We got Merrill mobilized its advisors. NASDAQ enables control with the options. It wasn't chance. This wasn't volatility. This was a coordinated institutional capture. That's what actually happened. That's why this week, starting from actually a couple of weeks, actually go back to October 10th, it actually started, but it really came together this past week. All right, now let's get into Bitcoin itself. Now that I took you through that wonderful history lesson, and let's talk about M2 global liquidity. Take you over to one of our X posts right here, a very, very important post where we actually bring this up. Liquidity isn't tightening, it's silently surging. Okay. It's not the halving. It's not the narrative of the month. It's not the meme influences or the ETF commercials. Bitcoin is like liquidity is silently surging, and that's what's going to drive Bitcoin. Now, of course, it's not going to happen like tomorrow, right? We're still thinking that we could get a movement downward, and we've been preparing for that. Now, for those of you that have not been in our pro group, we have a 71% win rate this week. Don't believe it? Get in there and we'll look at the trades. That's all I can say. So if you want to see how we deploy capital, shorts and longs, get in there. We've had a really good week this week. So anyway, everyone keeps parroting like it's higher for longer, but the market really isn't listening. Liquidity has already turned. And crypto is always the first to notice. We got 2.3 trillion drained from the reserve facility, repo facility. It's now zero. All right. So you got a market-based liquidity that's rising. All right. So crypto always sees this first. And of course, you got to pick your point. So I just suggest that you go over here and you read this post that we have. It's really in depth. So it'll be really helpful for you to understand that. Now, if we look at Bitcoin, Bitcoin survived 3 brutal years of a liquidity drain tightening. Now, as of December 1st, quantitative tightening is done. I told you it wasn't a big deal. Remember, I said that. I'm still going to stick to that. It's really a rounding error compared to 2021, but it's a good signal because also we have the Fed that's about to cut rates. They better cut rates. If not, we're going to be in for some turbulence. Now, if history repeats, we should be in for kind of a steady uptrend. Okay, the green zone is like QE fueled mania. We're not really getting total quantitative easing. Perhaps we'll see it on the balance sheet. We got to just pay attention to it. But the pivot is here. The clock is ticking, and every major bull market happened during what? Global M2 expansion. We got the Fed that's going to be cutting rates. We got 86% chance. 86.2% chance the Fed cuts rates. We got central bank balance sheet growth. So it's starting. It's starting. Okay, but we got to pick our points because, as we said, this is a technically trading market right now, and you got to know how to trade. That's why I suggest you follow us. Come on in, get some ideas from us. Now, we have posed that the 4-year cycle was a hoax. I know we're going to take some heat for it, but really, if we look at it completely it's really liquidity driven. Bitcoin really didn't move because of halving. Okay, it moved because the world was drowning in liquidity. Every bull market, we said, global to expand, M2 expansion. Every top was a liquidity contraction. Now we got PMI recovering. We got liquidity is expanding. QT is over. The Fed is starting to blink, and history says Bitcoin's true bull cycle is going to start. And again, we got it mapped out. We have a long-term goal. We're thinking where the market could go, where we have a lot of different scenarios that, you should really get into our pro group so you could check them out, just to check out the scenarios. You may not agree with them, but if we start, we introduced this a couple of videos back, the ISM, right? So, and why it really matters for Bitcoin. So we're going to get into that right now. If we look at this chart, United States ISM Purchasing Managers Index, okay? Now, this month, it came in at 48.2, down from 48.7, below the expected 49. Okay, so it's still contraction, but here's the twist. Production jumped from 48.2 to 51.4. So that was expansion in it. Now, that's how bottoms form. We got output that rises. We got orders that are lagging. Businesses are just like anybody else. They want to make sure, like, am I really moving forward here? Because if I'm not, I don't want to just put, I don't want to put cash out onto the street that I'm not going to get back very quickly. That's the name of the game, right? Unless you're selling pizzas, you always got to worry about, you know, because these guys are big boys. They have to buy very expensive things. It's not just flour and whatever you put in a pizza, right? But really, orders will lag. Now we're looking for confidence to return, and then that will improve liquidity. And if we add the big, beautiful bill in, the 2026 U.S. manufacturing investment, this can turn quite quickly. So right now, the number that the Fed got was actually saying, oh, things are kind of still slow. That actually could push in, make it. That's why they could say they actually cut the rate. Now, I have to caution you because we talked about this, and I want to bring you back to the 10-year bond chart, man. We got to pay attention to this bad boy because every time the yield goes up above 4.5%, the S&P came off hard. That's risk assets coming off. Right now, we're at a sticky 4.139. Don't really like that. But really, we need to keep the bond market has to stay cool because really they're upset about it. They'll actually come to terms with it because the new Fed chair, if we're talking about Kevin Hassett, if he gets in, he's not just going to come in and say we're slashing rates. He's not going to do that. I mean, he needs to build up credibility, and he's not the only person that has to agree with it. You got a board of governors that you have to go through. So the bond market will calm down, in my humble opinion. But right now, we have to say that we got the transition. The big picture is clear. Okay, transition phase is happening in Bitcoin. Liquidity has turned. Policy is shifting. Institutions are positioning. I mean, you saw all the big boys that are coming into this thing. Retail is still offside right now, or I would say unsure. Yields are stable for now. But let's talk what it means for Bitcoin today. Let's see. The macro sets the direction overall in the long term. The prices actually set the timing of this thing. So let's break down the charts where we can get into that infamous 2-hour chart and talk about Bitcoin and get the points that are really important. All right, looking at the 2-hour chart, what we got going right now, we've got that 87,382 that I said was the support. We just came within a cat's whisker of it. Just today I saw it. I was like, woo, coming right down into an area that we can buy some Bitcoin. Of course, I didn't actually do it because I was writing this script, contrary to what people think, that I put it into chat GHB or whatever the heck it is. I don't. I actually write my own scripts. I have my information, and I put my script out there. But hey, to each his own, right? That's what you want to think. That's fine. So right now, as it stands right now, so we came down to 87. Again, we got to get through, like, okay, I will say 90. If we can get through 90, not the 91, I'm not going to lower that main point. But if we can get through 90, that's showing a little bit of some strength. But of course, there's some resistance right behind it at 91,000. If anything, this market has to break up through the top of the 94 to actually show any strength. I don't think that's going to happen right away. But, narratives can shift really quick. But we're really expecting one more pop down. So as it stands right now, we have support at 87. Then we have extra support at 84. Let's say 84. Let's go 84,000 right to 87,000, or we can go 83 right to the 87 will be like the next channel of support. Okay, main support sits down, or better support sits down to 82. Main support for the whole thing sits at 8,600. 80,600 for those of you listening in your car, not 8,600, 80,600, and then the main support 78,270. That is the most important point. Now, we're thinking that there's going to be a squeeze. We're thinking that the big boys are going to come in and they're going to whack this thing again, only so they can accumulate. That's our opinion. Now, we have plans and contingency trades that we're studying and how we're going to handle it if the market does either or, upward breakout or downward breakout. If we get the upward breakout above, say, 94, you're going to have consistent volume. You can't be a spike in volume, because a spike in volume is going to mean head fake. It's just basically short covering. So don't take it. you know. But like I said, you know, you want to see how we deploy capital, get into our pro group. Now, we could look at Bitcoin and we could say like a bottoming phase is kind of loading right now. This is where all the guys will say, hey, those guys are perma bulls. Hey, look, we think Bitcoin's going up in the long run. Okay, we know how to trade it in the short term, but we got MACD that's flashing cycle lows. RSI hit like historic reversal zone. Okay, now look, this is a couple of days on this chart, so it's kind of relatively a small time frame chart. So you could get real quick bounces and then resets off of it. So it's not like a long term chart, but price is retesting the trend line that once capped the all time highs. Okay, and yet the crowd screams 60,000 or zero at this point. Now this is where the big boys actually step in. Smart money, like JP Morgan, like all the big players I just introduced you to, Schwab, they're all going to get people involved in this. They're going to step in. So we could actually say, like, accumulation, is it over? It's potentially over. Maybe. We might be able to say accumulation is potentially over. We got huge manipulation that's still happening. And we think there's going to be one more drive down before we actually break much, much higher. But really, if you think about it, manipulation may be peaking. Bitcoin distribution is loading. The bears are really celebrating a little bit early, in our opinion. We think that they're being baited, and this is how really smart money wrecks the overall crowd over and over again. So we could expect that when this phase ends, they really won't know what hit them. If we break above like 106, they're going to be panicked. That's the point. That's the breakout point. Now, we still think that there's one shakeout zone left. And this is what we're thinking. We're thinking we can come down to like 81,000. Remember, the most important point on our short-term chart, well, there's two. There's 80,600 and there's the 78,000 odd down below it, right? As long as we don't break 80,600, we could actually see the squeeze take place like a Wyckoff spring. Because once it breaks, like, say, through 94 from a dip down there, it's going to be they're going to catch everybody by the short hairs. That's for sure. So you got to learn how to trade the duck feathers out of this thing. You got to get into our pro group. All right. Now, also, if we're looking, right, we've had people tell us like, oh, look at the, bearish MACD. We're thinking it's bait. I'm going to show you the chart. Yeah, we see it. The 1 month cross down, but this setup looks nothing like 2021. Okay. It looks more like 2019, just before the real breakout. And there were no ETFs back then, right? There was no government adoption at all. There was no BlackRock. It's the same cross, but we think we got a different backdrop this time. So don't get fooled by it, all right? Don't get fooled by it. All right, let's get into Ethereum. Let's go over to our Ethereum 2-hour chart. Oh, looky. Tom's lines that don't mean anything, that one of our subscribers said. You just place lines on any place. Really? Look at that movement right off of the support point. Banged right back up. I don't know about my lines not meaning anything. And believe me, I got my eyes set on some people. I know who's talking like baloney about me. I got it. All right, so Ethereum right now, we came down to what, 2009.17. We had support really right at 2009.19, 2009.20. So we had a little bit of a spring upward from there. That's really cool. We're thinking Ethereum's like a sleeper. It's really the sleeper right now. We know if you look at Ethereum, Bitcoin, it's in a macro reversal zone. We'll get that into a second, right after we do like the short term. So as it stands right now, 2009.25. Let's see, what do we got to do? What do we have to get over right now? Hang on a second. So here's the big call. We got to get through 3,000. What's the number I got? 3,230 right now. 3,230. Let's just use this. We got to get through 3,240. I'm going to make a bold prediction. If we do not drift any lower and this line holds from this point forward, if we break up through 3,234, we're going to go to 3,500. There's the bold prediction right now. Okay, so right now we came back down, we retested support. What I'm saying is if we blow up through this point without creating any additional lower low, all right, we're going to go a bit higher. Okay, maybe 3,532. Remember, this point at 3,241 was actually the low close on this breakout bar, actually, right here. It was the close of the low of this bar, of this bear bar. Look what happened once it broke. It actually fell quite nicely down. I do suggest that, like ChatGPT told me, that if you look at closes, it's very, very important. So you can actually define a market by closes. Yeah, I think that's what they told me. All right. Yeah, very, very good. All right. Now, if we look at Ethereum here, where we talk about the Ethereum versus the Bitcoin chart, is flashing a signal again. This is what we've been noticing. Every time, look, the last time that we tapped this level, okay, Ethereum pumped 200% against Bitcoin. Guess where we are right now? Right back to where we were before. Now, the ratio doesn't lie, okay? The rotation is getting closer. We need Bitcoin dominance to cool off. We need Bitcoin to rally a little bit. Above 100 would be great, but then we could see this come to fruition. We do believe that Ethereum is going at 10 grand. Okay, we've said it. We've been saying it all along. It's not happening right now. No, when's it going to happen? Tomorrow. Tomorrow it's going to happen. But right now, today, is not the day, but who knows? Tomorrow? Yeah, maybe. All right. So if we look at Bitcoin dominance, all right, sitting right at 59.34, same exact price as yesterday. Terrific. That's just terrific. Okay. So we know it broke the wedge, okay, but we said it was going to be tricky. We expected it to come back up because when Bitcoin starts to rally again, because we're still in the doldrums here, it's actually going to spike this back up. So that's going to freak people out. And then the real descent can happen, the real breakdown can happen, because we look at altcoins themselves. Actually, before I get into altcoins, how do you join this pro group that I keep talking about? Well, it's real simple. The link is in the description. Right in the description, you click this link, you'll be taken over to a free professional Telegram. Well, so it's not a professional Telegram group. It's our Telegram group, but free pro traders in there, right? We offer insane alpha trade setups every day. Also, remember, don't forget, come in December, okay? Public service announcement where basically we're going to have something for you guys that nobody else ever did. Okay, so just keep your eyes out because we're going to be having something really special for you guys. All right, you want to go it alone. Well, we offer 2 outstanding brokers, WeX and also BTCC, both low fees, fast execution. We got some really good bonuses through our links. I believe that WeX, no fees for life. BTCC is offering a $500 US dollar token giveaway, but we really suggest that you come on over and actually check us out. This week we had a 71% hit rate. Awesome, really awesome. We made much more than we lost. So really, come on over. It's completely free. All right, let's go on back over to the good old altcoins. Finish up with altcoins. Now it's slowly grinding out. Slowly grinding out. We got the long-term downtrend has been broken. Okay. Macro support has held so far. RSI divergence has been confirmed. We've seen this setup before. Each time altcoins went vertical, but you gotta pick the right coins. Okay, this is not a shotgun approach. So really, right now we still have accumulation, not ignition yet. But we're starting to see some higher lows. We're starting to see Ethereum kind of get some strength back. And we got Bitcoin dominance that's still playing around, but eventually it's going to top out. And we got liquidity rising. So we're close to alt season, but not there yet, right? So also, if we looked at stable coins, look at good old stable coins. We've seen this 3 times before. Parabolic move into resistance. Stochastic RSI is topping out. Altcoins are bottoming out really quietly. You can only recognize the rotation once it's started. Okay, so just like I said, get into our pro group. We're looking at really good altcoins. All right, so as we wrap up today, remember, history does not repeat, but it sure does rhyme. We got the same players manipulating the market as always. And there's good old JP Morgan back in 1920. Look at a ticker behind him. Look at a ticker, the stock ticker behind him. If you guys don't know what that is, you got to check it out. You got to actually listen to one. Online, you could actually hear the tick, 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 tick of the machine. It's awesome. But anyway, come on over to X and make sure that you follow us on X, where we talk about Bitcoin, crypto all day, every day. Don't forget, Well, you said history does not repeat, but it rhymes. You saw the pictures from the 1920s. Also, remember, Bitcoin follows liquidity. Liquidity drives every cycle. Liquidity has already started to drip into the marketplace. The next chapter is just beginning when we got all these big boys playing around. So stay sharp, stay prepared. So what do you got to do? Well, you got to think about joining our pro group, right? Next thing you're going to do, you got to do your own research. As you know, I am a trader like you, and I am not a financial advisor. And what else do you have to do as a short-term trader? You got to enjoy the party, but dance near the door. I'll see you tomorrow. Stay safe, stay calm, stay prepared. Don't do knee-jerk trades. And as always, again, I'll see you in the next one. Cheers.